Dr. Ebo, this is the first time that you're speaking at this program after your doctorate. Last year, I was calling you pastor, and when I introduced you earlier on in the morning session, I said to people that you are pastor, you are doctor. So we'll decide which one. Anyway, thank you so much for joining us. I just want to briefly introduce you while I let you take on so we can maximize the 1 hour. There's so much to say about Dr. Ayodeji Ebo, but I will just say briefly that he's currently the Managing Director and the Chief Business Officer of Optimus. It's a digital platform powered by AfriInvest West Africa Limited. Dr. Ebo has over 16 years of experience, and I'm sure more than 16 now because this is an old bio of his I'm using, of experience in business and investment strategy and economic and investment research. He was the managing director of AfriInvest Securities Limited, a leading licensed broker dealer and subsidiary of AfriInvest Limited for about 4 years. And prior to this appointment as MD, he led the investment research team and worked in the investment banking division. Dr. Ayodeji Ebo is an authorized dealing clerk of the Nigerian Stock Exchange. He's an associate of the Chartered Institute of Stockbrokers and a fellow of the Association of Chartered Certified Accountants of UK. He's also an associate of the Chartered Institute for Securities and Investments UK. He has a BSc in economics and MSc in economics from the University of Jos and University of Lagos, respectively. He is a chartered professional accountant of British Columbia, Canada. He also has a BSc in applied accounting from Oxford Brookes University, UK. And he has MSc in financial engineering from WorldCoin University, US. Thank you so much, Dr. Ebo, for joining us today. The floor is yours. I'm sure before you start, you might want just to tell us something about your PhD because I don't have it in your bio. I didn't update it, pardon me. So the floor is yours. I will just go off now while you lead us on. Thank you so much. And thank you to the 22 people who have joined already. I'm sure as the conversation progresses, the number will increase. Thank you, Doctor.
Okay. Thank you very much, Pastor B. I like to call you. Thank you so much for this opportunity, and you're really doing very great job within the finance space, which is also a major area where there's a lot of gaps. So well done. God continue to embrace you. So I appreciate this opportunity to be here again. Thank you so much. Yes. So I've been asked to speak on investing made simple for young adults. And due to our limited time, so what we are doing here today is just to whet your appetite and so that you also be able to research more, but at least you'll be able to build that mindset because that's what is critical, what is key to whatever we are doing. So starting with, so let me move this here. So starting with understanding money basics, the first principle, which is global, which is very critical that we need to understand, is around budgeting. You know, when we talk about budgeting, some people switch off and feel like it makes me, it may make you inflexible. But what budget would help you to do is to plan how you earn. It helps you to plan how you spend. It helps you to also now plan how you invest. Because if you don't properly plan yourself, even if we spend 2-3 hours on talking about investing, if there's no savings for you because you have not planned yourself, there will be nothing to invest. And that is why it is very important. You need to have an idea. If I ask any of us now, what is your total expenses in a month? You should be able to give an estimate, not to the last kobo, but you should be able to have an idea so that you know that your total spending is less, or even if it's more, that means it's not coming as a surprise and you'll be able to manage things. So budgeting is like I've called it here, the foundation of investing. That is really important. There are some rules that will say the 50-30-20 rule, looking at your needs, your wants, and what you need to save. Different rules, but the bottom line here that we need to take away is that you need to have an idea of what your total expenses is and know what you need to save. So I've also seen situations where, say, there's no, in Nigeria of today, nothing much. When I look at my budget, even my income cannot cover my expenses. So one thing I say to people, especially, and I'm talking to mostly maybe young ones here now, and is that if you cannot reduce your budget, right? It means that you need to look for more income. You know, for those that maybe are familiar in developed climes abroad, see they have 2 jobs, 3 jobs. It means that you have to look for more resources. So you can't be rigid by saying you can't look for more resources to increase your income. And you're also rigid by unable to bring down your costs. That is like a double whammy. You are just postponing the evil day, if I'll put it that way. So you need to be able to establish that, then you need to know what you need to do. Secondly, emergency fund, which you will call it a safety net before investing. And reason why you need to have this emergency fund is that the unexpected do happen. But when it happens, are you able to, if I put it this way, are you able to support yourself within that period? Yes, we trust God, we have faith, we believe in God, but there are principles also to life that even the Bible too have also set some of those principles for us. So setting up an emergency fund, and the simple thing about emergency fund that for some of us is that you need to determine your cost. So if my total cost in a month is 500,000 naira that I spend, the rule of the thumb is to have minimum of 3 months. For those that follow Nigerian news, you know, when we talk about our reserves, what we look at is, does it cover our import, 6 months of imports? That's also the idea that if we need to buy things, if the government needs to import, do they have enough reserves that they will be able to import things into the country? And that's the same philosophy or ideology around this, is that have between 3 to 6 months. So like I was saying, if it's 500,000, it means I need to set aside 3 million. And what I tell people is that you don't need to save that 3 million within 6 months, within 1 year. You can set a target for yourself that I've just started my career and this is my cost. Let me first, for the next 6 months, for the next 1 year, let me set aside an emergency fund. And for emergency funds, you don't go and put it in land. You don't go and put it in bonds. You don't put it in assets that you cannot take out immediately. You see, emergency, it informs what you need to, and you don't put it in stocks. It must be, capital preservation must be your focus within that period. Also, it's good for us to look at good debt, bad debt. And what I'm trying to just paint here is that I won't say don't borrow, but what are you borrowing for? So you look at, are you borrowing to acquire assets or you are borrowing to acquire liabilities? So you look at, when we talk about good debts, you see that mortgage, or you have a business idea that I think maybe you started with, you need to expand and you are sure of your cash flow, you quickly borrow and you see the line of sight to pay back. Bad debt is you are borrowing to buy a car and maybe you don't have the means. If you have the means of paying back, then that is fine. You know, one thing I see that borrowing does is that it reduces your potential cash flow. So I borrow 1 million today and I have to pay back 20% interest. It means that there's the 200,000 extra that I would have gotten if I did not borrow that would impact on my expected income. So it reduces your potential. Then lastly, on this, the few tips that I want to give us on this topic is on setting financial goals. So you need to have your short-term goal, medium-term goal, and long-term goal. So you look at that. around, is it school, is it projects, retirement? Long-term goal is around retirement. Medium-term goal, you want to buy a house. How do you begin to, you want to save for your kids' school? How do you begin to, how do you start that? So we'll see that even as we progress. Yes. When I was trying to prepare, looking based on the topic, speaking to young people, why investing matters early in life. And one thing that we need to note is this is speaking to the power of compounding. If you look at the rate at which your investment will grow when you compound your interest, when we talk about compounding, is interest earning interest. So if I invest let me say I invest 10,000 today using a smaller amount, interest rate is average of 15%. I get 150 naira on my interest. It means that next year, what I will have as my capital to start or to continue that investment is 10,150. But it gets to a level that it begins to grow faster. That's Albert Einstein called it the eighth magic of the world, because if you set a target for yourself, it grows faster. Also, when you are saving and you are investing, you grow faster when you are saving and you are investing. I mentioned earlier what most people were at the early stage that they feel they don't, why they don't start saving is that they don't have a lot. And platforms have made it very easy now. With 1,000 naira, you can start. Even for those that are not even working, we know those that you see people who call it rainfall or windfall rather, that you see people bless you with funds, bless you with money that you need, and you're even able to save even while you're in school. Seen a lot of people even saving more than those that are even working while they're in school. So there's to buy stocks. With 1,000 naira, you can buy stocks. With 1,000 naira, you can do high yield savings. With 5,000 naira, you will see some of those investments. So that perception that or belief that you need a lot of money to start is something that we need to disabuse today. So I try to look at the rate. If you are contributing 100 naira every month, either you are putting it in savings, trying to be pessimistic, the rate at which I've used 2% and investment returns over the year average of 10%. You can see the rate at which your savings would be growing and the rate at which your investment will be growing. Investment will definitely be higher. So part of the takeaway that you need to note is that you can't be having idle funds you don't need for 1 month. Why are you just leaving it in your account? You need to look for safe outlet where you can invest those funds and is any interest on a daily basis. What I do, and that also puts me at check, is that if I have an idle fund that I'm not doing any, if you calculate the interest and look at what you are gaining, what you are losing daily. And secondly, you know that inflation is also not your friend. So if inflation rate is at 24% and you decide to just leave your savings idle, the purchasing your real value of your purchasing power would be eroded. The real value of that investment, you put 100,000, you didn't put it to work to even see how you want to earn a return. That same 100,000 will be worth about 80,000 in the next 1 year. So you are losing money directly. And what you need to work towards is that how do you reduce the gap? If inflation is 24%, meaning my savings will lose 24, almost 20,000 naira. But if I'm able to get an investment of 10,000 naira, 15,000 naira that is safe, I've minimized or reduced the impact. Also, compound interest and simple savings, you see the rate at which to grow. These are things, they are calculated online that you can set for yourself. So I try to also put this, that if you set a goal of 20 years for yourself, 1 million every year, and when you look at it, the 1 million may look that's so high. How much am I earning? How can I start with 1 million? Best thing is always to break it down. When you look at it, you break it down. This is 83,000 naira every month. So you are doing that consistently. You can see what you get at the average rate of 15%. So it's important that you set that goal. And that is why I said it's that mindset that actually matters. If someone tells you that you would have 180 million in 20 years, you take it as a joke, and some of us will just say, hey man, just believing that this person is just joking, and let me just accept it as faith. But when you take the action, faith without works is dead. So you need to take action. 83,000 every year, and you're consistently rolling over the interest would give you, this can be tested. So it's not gambling or speculating. Go online, do your calculation, look at different calculators. You would be able to get over 100 million in 20 years. So this is something that you need to have the back of your mind. So also in that mind of building that investment mindset, as we start this career or this financial journey, patience and discipline should be our focus. It is long term. So you are investing in bonds, you are investing in high yield investment. You would see what the 20-year plan. So it doesn't look interesting at the beginning, but when you look at it in 20 years, it begins to look, or even from year 10, it begins to look interesting. So always allow long-term to be your focus. If you want to get it now, so most investment that looks like is giving you investments or giving you significant return now also means that if anything happens, you can lose that return immediately. So let that long-term, you're investing in stocks. Yes, stocks goes up and down. But because if you are consistent and you are well diversified, you're investing in good stocks, then you will see that it will yield return. By the time you get your dividend, you also reinvest your dividend. All this would add up and begin to improve or accelerate your journey towards financial freedom. Understanding risk and reward. I hear people say, can you help me? Ayo, can you assist me? Do you have an investment that is low risk but high return? It doesn't work that way in this space. When you are looking about investment, that principle of the higher the risk, the higher the return comes in. So if you are not willing to take the risk, then you cannot also expect to enjoy the reward. When you look at the stock market this year, a lot of the stocks that have gained significantly, even for growth stocks, are people that were willing to take the risk, and it yielded result. Sometimes it can go the other way around, but they have looked at their risk. So managing risk is really very key, and looking at it based on reward. And you need to understand yourself. If you are the type that if you buy stocks and when you see 10% down in the stock, you cannot sleep, your blood pressure is high, it means stock is not meant for you. Just understand yourself and stay with fixed income. You can still accelerate your growth also with that. So you need to understand yourself. Emotional control. So avoiding FOMO and panic. We saw that it happens in the stock market, and when the stock market has moved significantly, that is when you begin to see people jump and become unnecessarily aggressive to invest in those stocks. FOMO is fear of missing out. You need to be aware of that. Always do your plan, and that is why you need to have your plan. Continuous learning is also important. You can't say you want to achieve financial freedom and you don't want to create time to learn. So you see people very successful in their area or field, they are doing very well, but this space, you can't leave that gap of learning the investment options, how you want to build financial freedom. So you need to pay a lot of attention. There's that gap because how our education system is built, that the schools don't pay attention to this. Even at university level, they don't pay attention on how you want to grow your investment, how you can build financial freedom, even at the age of even as young as 10. These are the things that you are now learning even as an adult. So you need to look at that. Delay gratification, it's important. Also, growth oriented. I'm looking at our time so we can get into some of the main part of this presentation. So I've tried to look at the investment into traditional investment and alternative investment. Stocks, yes, stock is good, especially if you are young. If you invest in stocks that have strong fundamentals, you will grow, you will achieve financial freedom faster. And because it's long term, when you look at companies that have strong fundamentals, you would be able to grow your investment faster. When you look at the stocks, when I talk about stocks, both Nigerian stock and US stocks, and if you don't even want to put too much mind on identifying individual stocks, you can look at what we call exchange rated traded funds, which is like a basket of stocks that you buy into it. So look at Nigeria, there's what we call the NSE 30 that captures the top most capitalized 30 stocks and liquid stock in Nigeria. You buy them, it means you are not bothered about whether they pay dividend, or you see the growth in those stocks will reflect in your ETF. ETF trades like shares. You can buy that. And stocks, people buy stocks for two things: potential growth, we call it capital appreciation, and dividend. Dividend is cash flow. You get cash flow periodically. So there are stocks that pay, even in Nigeria, that pays dividend every quarter, like Seplat pays dividend every quarter. Some pay twice in a year, likes of the top banks and most of the top brands. And at least you see a lot of companies pay every year. So you need to target companies that have been paying dividend. So I always, also for those that are new, you can look at stocks that have paid dividend minimum of 3 or 4 times out of 5 years before you invest. Because even for those that we call that have the knowledge around investment, PENCOM rule states that they should not invest in companies that have not paid dividend 3 out of 5 years. So even if as an individual, you even adopt that. So you're not just buying any company, because before you can pay dividend, you have to be profitable. And if you are building wealth towards future, building generational wealth that you want to transfer, it means that you need to buy stock. So even for your kids, even when you begin to have offspring, buy stocks for your kids. I've been doing it for over 10 years. And so when you look at their stocks, some of them are 600%, some of them are 500%. You keep accumulating. If it's 5,000 monthly you want to do, if it's 1,000 monthly, just start, open accounts for them and begin to do that. The US market too, beyond just capital appreciation, you also hedge against currency. If you don't want to get yourself too exposed to the US market, there's what we also call VOO ETF. That's Vanguard 500 ETF that captures the top 500 companies. So I've analyzed, it's my favorite ETF. Is delivered average of 18% in the last 5 years. Only 2022 market was down. So even this year it's delivered 11%. So if you are getting over 10%, 15% from a dollar investment, it's really very good. By the time you've had depreciation of the naira to it, you'll see that your return will be very impressive. So fixed income, I'll speak more on fixed income in subsequent slide. Mutual fund works is a collective investment scheme. Some, if you don't have much time, you can use also to build your investment. Some as low as 1,000 naira, you begin to add to your investment. Always reinvest. One of the takeaways today is reinvesting the income. That's the interest, because mutual fund will pay distribution or pay you interest. Reinvest that interest, and there are platforms that you would even already elect. They won't pay it out to you. They use it to buy additional units of mutual funds, because mutual funds are unitized. Then REITs, if you also want to invest in the real estate space, is not performing as expected in terms of performance in Nigeria, but we're beginning to see traction within that space. So there are REITs, about 3 or 4 REITs that are listed on the Nigerian Stock Exchange. And also in the US, a lot of those REITs, real estate companies, pay dividend every month. And if we also want to look at them, if the dividend yield also makes a lot of sense. These are also alternative. So alternative investment, it's also now getting more risky, which we'll look at the different looking at your risk appetite. So real estate, if you need to either ownership or your joint venture for those that have the capacity to grow. But I always say, if it's an area you are not familiar with, get a lawyer to also support you. So you don't just go and throw your hard-earned money to help you do your search before you go into that space. Commodity, gold, oil, and with ETFs, you can buy it on most of the platform where they trade US stocks. So yeah, I've been pushing even to my community in these days that also have gold. You buy gold, you can buy the ETF gold, SPDR. Whatever happens to the price of gold, you also benefit from it. So you don't need to own the actual gold, but you benefit if you buy the ETF. If you buy the oil ETF, you benefit from crude oil prices. It's really very important. When there are crises around the economy, the world, most of the commodities also do well. This is the last one here is digital asset, very risky and is only meant for those that are really aggressive, that you know that your risk appetite is high. And you can have, if you also don't want to take too much risk within that space, there are ETFs that tracks cryptocurrency. Also, you can stick with the flagship products like Bitcoin, Ethereum, that you know that has been in the market, because we're already seeing fund managers, BlackRock and the likes also playing within this space. So you would see that the summary that I've looked at is how you are building a portfolio for yourself. Before I wrap it up with fixed income. So you need to diversify, and there are different, we'll look at that, different buckets of portfolios that you can look at. Now, why I put this last around investment is because a lot of us will be more comfortable with this. And to make it easier for us, I've also added the minimum. So high yield savings. What are high yield savings? So you have platforms like of PiggyVest, Optimus by AfriInvest that calorie-wise have high yield savings. Even banks now also have high yield savings. Zenith, EcoBank have savings that they pay above the normal interest rates on savings account. Minimum 1,000 naira. It means that you don't have any excuse. You can begin to build up your capital. And one thing you can look at is some areas you build up the capital and you graduate. That's okay. I've built up my savings over 1 million, 2 million. What else can I do that will give me higher interest rates and will not expose me to too much risk? So you can also look at it like that. FGN savings bond every month. We're expecting next week the one for September will be out. FGN savings bond. You lock in your investment 2 years, 3 years, and they pay interest every quarter. But to grow this faster, the interest you get, I would always advise add it to the next month that you want to do, to add it to. And one interesting thing about it is that you are locking your interests ahead. If you lock your interest for 3 years at 20% and interest rate comes down to 5%, you are not affected. You continue to benefit from that high rate. So you lock it in. The treasury bills, or most time in the secondary market, you can get as low as 100,000 naira. You can invest in it, and some you can take your interest upfront when you invest in treasury bills. If you have the capacity to do the primary market auction, which you get the full rate, its minimum is 50 million. So you can also consider that. Commercial papers, which you are lending money to corporate. Treasury bills is you are lending money to the government. FGN savings bond, you are lending money to the government. So when you're investing in commercial paper, you have to be sure of the credit rating of the company that you are giving your money. Will they be able to pay you back? So you have to look at their credit rating, and minimum is at 5 million. I know that platform like I Invest has lowered that minimum of 10,000 naira in some commercial papers. So you can also look at that. FGN bonds, minimum Standard size is 100 million, but some investment outfit with 20 million, they will be able to get you bonds that you can invest, 10-year bond, 20-year bond, 50-year bond, that you just continue to earn interest, which is really very impressive. So now with all the discussion, sorry, I'm also looking at time. The time is just moving very, very fast. Is how do you start? So the first thing is you need to determine which platform do you want to use. And to choose a platform, ensure that there's a bit of regulation or backing that they have. Are they affiliated to a company that is well known? And how long have they been in the market, or who are the drivers of that particular platform? What have they done before also starting it? So you need to be sure, are they regulated? The Securities and Exchange Commission, the CBN, what are the licenses that they carry? You need to look out for that. Then look at for the minimum investment that you can start with. For some firms, they may have their threshold, but with technology these days, most people have lowered their threshold. So you need to start. Before you look at the minimum amount you want to begin with, you must have done your budget, looking at where we started from. Done your emergency savings bond. You understand what you have left, and you want to begin to invest. So for discipline, I always tell people, set up, let it be automatic, that you are just debited. So you set up for most platform now, you can link your bank, or maybe you link a bank that you move money to if you don't want to expose your main account to any platform. And it automatically, so even if you don't remember, at that particular day you have set, it adds up your savings, it adds up to what you are building. Also, diversification. We are used to hearing not putting all eggs in one basket. This is very important. So when we talk about diversification across asset classes, I showed us portfolio then. You diversify across asset classes, and you also, when it comes to stocks, diversify across sectors. If you check your stock portfolio and it's only banking you have, or it's only insurance you have, or it's only consumer goods you have, then there's a problem. Or out of all your investments, it's only fixed income. You can't even do 5% in other asset classes. Then that's a major problem. When interest rate drops significantly, it means you will not benefit within that period. So now I try to put together a type of portfolio you may want to build. Building your first portfolio, if you are just starting, a conservative portfolio. Majorly, you have fixed income. The different fixed income are highlighted. You also have fundamental stocks. When I call these are strong stocks that have stood the test of time. They've been consistent with dividend. They've been consistent with earnings growth. Look at those stocks. And ETFs. ETFs helps you to balance your portfolio, because, rather than investing just in GT Bank, you have invested in 30 companies. So if 5 or 6 out of that company are not doing well and other 25 are doing well, it will balance it out or even out. So if you are very conservative, you look also in the US, you just do ETFs. There was a time I used to have close to 50% of my US portfolio VOO ETF, because I don't want too much volatility. Look at that. Moderate portfolio. It means that you're graduating. Maybe you have mastered the market and you think you want to graduate. Fixed income plus a mix of fundamental and growth stocks. Growth stocks are more volatile. They are just coming up. We are betting on them that they will also be strong in the future, and anything can happen along that way. And that is why you don't have significant exposure. So when you are looking at a mix, if you are moderate, maybe you have 70% fundamentals, 30% growth stock in your portfolio, whether it's US, whether in Nigeria, you look at it, then you also need to have ETFs. And looking at real estate, where you are going through REITs or you are holding the assets. Now to those that are aggressive portfolio, you have fixed income, you have more of growth stocks. So you are just betting and you are hoping that maybe out of the 10 stocks, even if 5, 6 of them do very well, you cover the loss from those that are not doing very well. You look at that, and age factor is also very, very important that you're taking. It's not the same age. If you are young, you have more ability to take more risk, more invest in stocks. But as you grow older, you also change your allocation to stocks. You change your allocation to fixed income. All those things actually matter. They matter a lot. You know, like I said, that this is just an appetite. 40 minutes is not sufficient for us to go into this. But what I want us to take away today is building that mindset. It is more important than whatever we take. Once you know that you can't be keeping idle funds, you need to focus on building a future for yourself. So common mistakes to avoid: don't chase quick profit, get rich quick schemes, Ponzi schemes. Be mindful of them. Timing the market instead of the time in the market. You need to, don't be timing the market. Oh, I've seen this thing, I think it can go to 10, it can go to 11. You look at long term, because you are young, you are patient. It delivers over time. There have been studies, you can also research into it. Sometimes if you keep compounding, and for those that are trading, how will the two portfolio performs? Most time it's not just trading will not deliver overall all the time. Ignoring transaction charges, management fees. So you are just buying one stock, and you have the ability to buy their fixed costs. Yesterday, I was doing analysis for the community that 4 naira SMS charges. So you just buy 1 unit of access. You know, there's a fixed cost. When you look at your overall cost, may not be up to one naira, but that fixed cost of SMS will be increasing your cost. So if you know you can buy 10 units, why don't you buy 10 units at once rather than buying just 1 unit? And you are just buying and selling, you are not checking the cost. Is important. And if even fixed income investments, that you also see that you have withholding tax. So when people give you rates, is it gross, is it net? You need to look at that. And following the crowd without research, you just go online, YouTube, and you just follow. They said you should buy stocks, and you are just buying. You have not also done your own due diligence. Borrowing to invest without understanding the risks. This is very important. You don't borrow to invest in the stock market. And finally, this is it, that investing is not complicated. Start small, start early, and stay consistent. I'll say that again. Investing is not complicated. Start small, start early, and stay consistent. Your money should work for you, not just sit idle. I've emphasized that. And say building wealth is a marathon and not a sprint. So you need to also always note that. So I will stop here. Thanks. And I would like to just take questions for the next 10 minutes. Thank you for listening. And I believe we've been able to get 1 or 2 things from this. Thank you.
Thank you so much, Dr. Ebo, Dr. Pastor Ebo. Thank you so much. We have very little time, and so we'll just quickly go to the questions. And I just want to add that Dr. Ebo is a go-to person in this community for our investment conversations. We have his previous conversations and presentations on investment on our YouTube channel. He also has his own community where, if you're so interested in just dealing with investments, like I call investment ABC, he handholds people. He has a community of close-knitted people that he works with. So if you want to be part of that community, I think, Doc, I see that you put his Instagram page in the chat box. So you can follow him. I think it's Get Investment, Dr. Ebo, Get Investment Tips, right?
Yes, yes.
So his Instagram
Get
handle,
investment and business tips, yeah.
Yes, so we have his Instagram handle in the chat box. I'm saying this because there will be so many questions and we just can't handle everything because he has to go to another meeting and we have the second speaker already in the house. I think Engineer Nee was helping us answer some questions, but there is one that I would like you to answer by yourself, Dr. Ebo, because Blessing Ojiuzo says, how do I buy international stocks? Example, companies outside Nigeria in dollar. I'm using AfriInvestor 2.0, but it doesn't support buying stocks in dollar yet.
Okay, thank you very much. So there are a few platforms. The first one I would mention is Optimus by AfriInvest. It's also owned by AfriInvest, fully owned by AfriInvest. So you can download the Optimus by AfriInvest. You can also try Chaka, Trove, Bamboo if you are in Nigeria, and you can also try Vest. Vest is owned by a Brazilian company. You can also try them. So it's you'll be able to trade fractional shares. Fractional shares means that with as low as $1, you begin to buy Apple shares. You own 0.01%. When they pay dividend, you also get the fraction of that dividend. So you can also start with that. So I think I've been able to answer that.
Yes, thank you, Dr. Ebo. I think that's very clear. I just want you to say something briefly because I can see in my audience, I have some people joining us, Nigerians in diaspora, UK and United States. I just want you to say something about the Nigerian climate now for attracting investments and how they can benefit if they choose to invest now in Nigeria.
Okay, so I think economic wise, we think that there's a bit of stability. So when we look at it based on from the exchange rate perspective. So in the last 6 months, there's been relative stability in exchange rate, which we think that should be sustained. The CBN will do everything within power to see how that can be sustained. Secondly, is that we think that the stability will now begin to bring in foreign investors, which would impact across the market. One downside impact is we're already getting to another election cycle. We're already getting into another election cycle, which may maybe just delay that. So inflation, we think that will also remain high. So if we're looking at those in diaspora, where they can benefit with the capacity is also looking at real estate. The Nigerian stock market to also continue to deliver because most of the non-financial companies do very well when the exchange rate is stable, when they can forecast and there's liquidity. When they want to import, they can import properly. So we think that there's enough potential in the Nigerian economy if they sustain it. So we're not there yet, nothing to be excited about at a 3% growth rate, but the stability is key. Looking at last 2 years, people were unable to plan and that impacted on businesses. And that's why when you look at the real estate space now, we feel that there's also a lot of opportunities within that space that you can take advantage of. But you have to have a mix. Don't convert all your money from foreign currency to Naira. Have a mix, maybe a 50-50. We don't expect a depreciation of the Naira close to 10% this year. They are doing everything within their power to even ensure that it can appreciate, which is positive for us, may not be positive for those in diaspora based on Naira they are getting, but you can look at to balance that. You can invest in Naira that gives you higher value and can help you balance it out. Thank you. I can't hear you. You're muted, ma.
Oh, sorry. I just want to encourage these friends of mine around the call that are in diaspora. If you do want some hand-holding or some, specific, some responses to things you're uncertain about in the Nigerian market, you can send an email to us and we can get you responses or link you to Dr. Ebo or other experts in this area. I hear you very much, Dr. Ebo. It's comfortable now, people can choose to invest at home. Thank you so much. Because this particular day one of this program is curated for young people, I'm going to take questions from young people, and I want you to please answer as quickly as you can because there are quite a number of them. Now, there's somebody who says, what kind of shares should I invest in as a student? I know you talked, to this earlier on, but just maybe a quick clarification again to this person who's a student and who would like to invest in shares.
Yeah, so I think that for as a student and you are just starting, focus on fundamental stocks. So you look at it across sectors. Who are the leaders across these sectors? Look at GT Bank. We always say within the bank, GT Zenith, depending if you want to add access or you had UBA, start with those ones. And so that you're also getting at least average dividend yield of 8-9% is sizable, is good. You look at the agri sector, Okomu Presco, because of palm oil, prices have been going up, demand continues to remain strong. That's also, you look at it that the oil and gas sector, Aradel or Seplat, you can pick one. The cement sector, Dangote Cement or Lafarge, WAPCO, is also very good that you can look at. You look at that sector, the FMCG sector, likes of Cadbury, Nestle. These are strong companies. Then you want to look at growth stocks because if you are young, you are looking at the likes of if within the banking space, FCMB or WEMA, look at CWG. Yes, so within that space, PZ, you can also have a mix, but be heavy in fundamental stocks. So let me just make it brief so that I can answer other questions.
Yes, thank you very much. He has a hard stop, so we have just 5 more minutes. This person passed a comment in the chat box, Dr. Ebo, and it wasn't a question, but she said it's so overwhelming to do a lot of research when trying to invest in shares. So I can't, because of time, I don't want to use her exact words going back to look for it. But something about the research that needs to be done is overwhelming. What do you have to advise such a person?
Yeah, so part of and that's why if you get a good community to join, right, which was part of what informed, we're over 3,000 plus in the community, and rather than, yes, why you have 1-2 people reaching out, but it's easier for me to guide and drop and educate and build people up, and they also continue to build other people up. So it's easier. So it's those heavy lifting that we try to do, but you also need to create time also on the side to read the posts, read some of the comments, and have a bit of understanding. Well, so wherever community, check who is running them, what have they done before. Don't just join any community. And if you join, observe, see whether you're getting value, and that would really, really help.
Thank you, Dr. Ebo. If I'm taking anything away, you say start small, stay consistent, start early. Some of us didn't start so early, but I see a comment from Busola Gunaike, and thank you so much for joining us, joining from diaspora. Thank you. And she says it's never too late to start. We don't have so much time. I just want to give you the last 3 minutes. If there's something you want to say, we have different ages. There's some questions from very young people around the call, but I think I'll pass all that to you later. And there are people, I think I should take the one from, yes. There's a final one, Dr. Ebo. Olugbodi Babafemi says, if I employ the services of an asset management firm to invest in treasury bills, for example, would I pay them or they have a way of making their money on the transaction?
Okay, yes, you would have to pay them. There's what we call management fee, and there's a minimum threshold. So you would pay the management fee, then beyond management fee, there's what we call success fee. So management fee, fine, and they give you a target return that if they deliver above that threshold, then they also share from the success fee. So you need to look at if you can afford to do if you don't have the time and you have the resources, then go for a managed account, but also be sure of what those that have been managing it based on their experience, because you are still the one carrying the risk. And whether it's discretionary or non-discretionary, whether you want to engage people first before you go and buy, or you also want to, you decide that you leave it for them. So you need to balance both.
All right, sir. Thank you so very much. I just want you to use the last comment and just dovetail and explain mutual funds to us quickly. Some of us are very lazy. I'm not saying I'm lazy, but some people just don't even have the capacity to do all that reading up and everything. Can you explain the benefits of mutual funds to such people or people who are overwhelmed with research, so to say?
Okay, yeah, so thank you. So the analogy that I always use is that mutual fund is the pooling fund. So we're about 55 on this call now. And if all of us come together and contribute 1,000 naira, the capacity, our negotiating power is higher. So they pull all the funds together, they get higher rate, and we all benefit from that higher rate. And also, if it's stocks that the money is being invested in, rather than me going to buy just First Bank, if all of us come together, that same money can be used to buy 20 stocks. It means that I'm more diversified, it's more balanced, and it's regulated in Nigeria. You can't lose your funds in mutual funds because it's also owned by a custodian, managed by custodians. So for most firms that have even gone under, the Securities and Exchange Commission appoint a new firm to take over. Once is a registered, so you need to note it's registered mutual fund. So you need to be sure that it's registered with the Securities and Exchange Commission. So with that, you can invest money at any level, and you can also take it out after the lock-in period. So it's really a way to build your wealth. And maybe parting what's like Pastor B said is that, please, the consistency is key. That is it. It's not just putting 1,000 today and just remember in the next 6 months. Have your plan. If it's 500 naira you want to put, and once you build it, it's scientific. Once you understand that concept and you're able to build that attitude on investing, then the rest is always history, because you would see the results and you would even be the one to be preaching to others that giving what you are able to achieve. So please, the takeaway here is that build that culture, build that consistency, and the rest will always be history. Thank you so much, Ma, for this opportunity once again.
We cannot thank you enough, Dr. Ebo. You have been very, very supportive of the annual financial literacy workshop of this community, and we are very grateful to you because you do this free. We can't afford to pay you, but you bring your wealth of experience and you share and motivate us. Thank you so very much, sir. I know you have a WhatsApp community. Do we have details of this, of joining this community on your Instagram page?
No, I will share the WhatsApp group with you, so you can share with them.
Okay, so we can share with them.
Thank you.
Yes, thank you so much, Pastor. I know you have to go. Thank you for being with us again, and it's always a pleasure and an honor to host you. Thank you so much. We have recordings of past conversations with Dr. Ebo on our page, and he has a lot also on his page. So if you want to get more details on what he's spoken about, please visit the YouTube page of Finance Coach BK or Get Investment and Finance Tips. He has a YouTube page and he does share teachings on a weekly basis. Thank you so much, sir. It's good to see you.
Yeah, thank you, man.
Have a good evening.
Enjoy the rest of the program.
Thank you so much.